Good morning, I'm Tim Carter, I'm a Client Portfolio Manager on npower's Optimisation Desk, and welcome to this morning's market update on Monday the 16th of March. So after a slightly bearish week last week for prices, due to good fundamental supply and a weak euro, this week's actually starting off a little bit firmer, particularly on the near curve. The key drivers for this are: number one, the cold weather forecast from last week is starting to materialise, with UK demand up 25 MCM on seasonal normal levels. Number two, we've got fairly weak storage withdrawals today, which isn't helping on the supply side. And number three, the wind feeding is also particularly poor, tightening up the power supply picture too. So those are the key drivers. If you have any questions, please contact us on the email address provided. Otherwise, continue to watch for a bit more detail. So as I mentioned, temperatures are outturning in line with the cooler forecast from last week, with average temperatures a touch below seasonal normal, but this could improve through the week before another cold snap next week. This is increasing the domestic demand to over 205 MCM today, while the lower wind feeding is prompting higher CCGT demand as well. The UK CS pipelines are all flowing reasonably well this morning. Langlid back up to nearer capacity following some of the Norwegian outages last week. We've also seen exports through IUK reverse this week, so we've now got a net 5 MCM import today, as the premiums against the European hubs have narrowed. On the power side, as I mentioned, the wind feeding today is particularly poor compared to recent weeks, with less than a gigawatt forecast for the peak, meaning peak margins today are actually below 10 gigawatts for the first time in several weeks. The wind may pick up a touch as we move through the week, but for now CCGT and coal are making up the majority of the stack, each contributing 35%. Looking quickly at the wider commodity complex, oil is now trading below $54 per barrel, as market oversupply is quickly leading to storage capacity running low, adding additional pressure on prices. Meanwhile, coal is a bit firmer today, having settled around the $58 per tonne region, while the carbon markets remain weak in the mid-€6 per tonne range. This comes despite an announcement that the carbon reserve to address market oversupply will be established by 2018 and operational by 2021. That's it for this morning, but just to recap, we've got tight power and gas systems leading to a bit of firmness on the front end of the curve. Have a great day, and we'll speak to you again tomorrow.